You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time once again for This Week in Futures Options, back at our usual time, Friday, 3 p.m. Central. Looking back at the week that was from a futures options trading perspective, whatever the hot products were this week, we're going to dive into them. Maybe a little bit of treasuries, maybe a little soybeans, maybe a little crude, maybe even some fun new stuff like our crazy trade of the week and all sorts of other good stuff. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network, with the addition of TWIFO. That gets us up to 14, and all sorts of fun stuff in store for you. You guys know where to find the good stuff by now. Theoptionsinsider.com to check it out, see what we're working on, all the good stuff. Of course, iTunes, TuneIn, Stitcher, so on and so forth. And, of course, while you're there, we'd love to hear from you guys. Send us your questions, your comments, your feedback, your insight, anything you want to share with us as well as with your fellow listeners. And we'll debate it, discuss it, get it out there to chew on the old program. And joining me on this program today is my futures options compatriot, your friend and mine, Mr. Nick Howard, the founder of Bantix Technologies and the creator of a little platform we like to use around here called QuickStrike. Nick, welcome back to This Week in Futures Options, sir.
I am back, man, with a hoarse voice after talking so much this week with you. So look forward to getting started here again.
Ironically, the other two are not up on the network yet. So actually, I think yesterday's show is up now. But the LSFO should be going up next week. So even though we've been talking a lot, Nick, unless they were streaming live, people didn't hear it. So they'll be coming out soon. So they're like, why is that guy so hoarse? It's because he's been talking a lot of futures options on the old program and on the old network this week. Let's get right into it, Nick. It's been a busy week in the realm of futures options. You and I have been going back and forth all week, finding some interesting trades, interesting nuggets that have been catching our eye across the week. Let's start this week in a product category that hasn't really gotten a lot of love on the old TWIFO show a lot. We've been so busy with crude and gold initially. Then, of course, the recent soybean explosion has kind of dominated the headlines a lot. We haven't had a chance to get beyond some other product categories. This is one that kind of came on your radar earlier this week, Nick. I noticed you noticed some really some interesting size call buying out there. Of course, I'm talking about Treasuries earlier this week. I believe it was on the Tuesday when you really saw a lot of this call buying going up. Pretty decent size, 25,000, 56,000 in some of these other later prints. Also seeing some interesting opening spreads out here, some verticals, pretty tight verticals, 129.75 by 130.25. The strikes always blew my mind out here in the Treasury. That's why I never traded them. The strikes are just weird. The quarter strikes, half strikes, weird points. But it's all about ticks out here in Treasury land. But let's dive in with that, Nick. A lot of interesting stuff I know has been catching your eye. Perhaps some more has popped on your radar since the last time you and I chatted about this earlier this week. So walk us through what's been catching your eye out there in Treasury land this week.
Well, yeah, as far as the strikes go we're going to talk about the 10-year. Well, in all the Treasury options, they split the strikes further about a month ago. So the 30-year used to just be 1 point increments, and now it's half point increments. The 10-year used to be half point increments, now it's quarter point. Because
that's what they needed. They needed more strike confusion out there, right?
More strikes. Well, I think what happens, and this is the thing that you and I talked about wanting to mention, people look at those strikes and they don't really mean a lot they're strikes that mean a lot in reference to what the futures price is. But for the people that are utilizing the options or trading the future, those strikes or those numbers, those prices, they actually represent yields on the different maturities of the notes, bonds, and et cetera. And it's easier to sort of discern that in the Eurodollars because you take 100 minus the price, and that tells you what the yield is for the short-term yield is there. So they added the strike so people can have a little bit more ability to target what yield they think things are going to trade. So when you start to see Treasury trades or you see the different strikes go up, it's really important to at least try to find a place or to understand that that strike might mean like a 0.25% difference in that particular rate, which might be them saying, hey, I think that rates are going to go down by this much or up by this much. So that's sort of the first trick to sort of get over. And then the worst part about the Treasuries is not even the strikes and the goofiness there, but it's the fact that the premium trades in 60/4 and the futures tick in 30 seconds. So you talk about fun math. That's not fun math. But in any case, yeah, there's some interesting and somewhat goofy stuff that went on early in the week, as you alluded to, in the August contract, which has about 56 days. So at the time, it was the 60-day auction. We had a zero delta call traded 25,000 times. So that's the 139.5 strike. So to put more of that doesn't really mean anything,
zero
right?
Zero deltas. So paying up for all that total of zero deltas, that's what they did?
Yeah, they did. And I checked around, and I'm pretty sure they paid like a full tick for that zero delta, which it's $15.625 per tick, and they did 25,000 of them. So they laid out almost $400,000 on that trade. And if it was a half a tick, then it was 200,000. But still, on a zero delta, it does that I would say constitutes as one of our crazy trades of the day, right?
That would definitely be a crazy trade of the week. Zero delta calls. I'm trying to remember the last time. I mean, you got at least something in there, at least a fractional one delta, right? But zero delta calls. That's impressive.
Yeah, zero delta at the time, about a 1% move in the interest rate. So that's what that strike would constitute. And back in the days in the pit, when anybody ever came in and bought a real out of the money call, people were falling all over themselves to try to sell the thing, right? Because obviously, I mean, and I'm sure you ran into the same thing when you were in the equity pits. It's thought of as free money, but that stuff's not always free money. This one sort of looks like free money, and the reason you say that is because you can easily buy something probably for the same price, way closer to the money, and then you can ratio it out and you kind of protect yourself that way. So that's sort of an odd trade. And
I mean, even if you're closing, if it's that far gone, zero delta, you can come down the strike chain a little bit, and get yourself a little bit something better and leg into a spread maybe, and take advantage of that.
Spread.
Why would you? I get the symmetry of wanting to close out what you open. Maybe the risk manager tapped them on the shoulder to get rid of these. But still, that's an odd choice to say the least. Perhaps even
it is an odd choice.
Perhaps even our crazy.
It was open interest changed by 25,000 on that same thing. So it was just sitting out there. That was an empty strike for the most part.
Oh, so it was openings. It doesn't even have.
It was an opening. Yeah.
That's even worse.
Yeah, that's the part that doesn't make much sense. So anyway, that's kind of one of the more interesting odd ones that happened out there. But then, and again, we say this every week. We talk about the weekly options that are available at the CME Group, and just tremendous amount of activity in the Treasury weekly options. So we had the week 4 expires today, but you had a great deal of activity out there. A total volume of almost 300,000 contracts traded in that option this week. So that's a tremendous amount. And then in the 129.75 call, which is basically at the money call, that traded about 90,000 times. So talking about liquidity, the ability to trade. And really, this becomes almost like a binary option of sorts, right? It's moving back and forth. It's either going to be in the money or out of the money, or like a mini future almost. There's lots of opportunity in the Treasury to sort of watch the price action and make some trades. So that strike traded as part of some call spreads and outright as well. So a lot available trade activity out there in the weekly option. And then further out further out. I shouldn't even say further out. I'm further out in terms of the weeklies. In the July contract, lots of 128 puts, which is about a point and a half off at the money at this point, and that constituted almost 50% of the change in open interest, or that volume is over 10% of the overall volume in that contract this week as well. So lots goes on in the 10-year. That's the most active. If anybody's interested, if you want to trade treasuries, the 10-year is the place to be. It's the most liquid. It's the most active. So a lot of things you can do there if you want to get involved in the treasury market.
That's I had some other things lined up for a crazy trade of the week. And we'll certainly get to those in a little bit, but I'm thinking the more I'm looking at this Merrill print, it's a strong contender, shall we say, Nick? I don't want to anoint it just yet, but it's an impressive contender, shall we say. Don't see too many people paying up to open on zero delta strikes.
No, for sure, it certainly is. And then just one other item of note, probably in the treasuries, is that in the 5-year, again, that's going to trade more when you start to see the FOMC and the Fed reaction to the Fed conversation and that type of thing. Lots of put buying in there, which would mean that people are considering that there's a rate move to the upside. So, right, the Treasury futures go down, the rates go up. So there was a fair amount of put buying there in the 5-year as well. And that was across a couple of different expirations, I think both July and August. So that kind of wraps it up for the kind of the big activity in the Treasury market.
Yeah, as we move toward the big FOMC decision in a couple of weeks, you got non-farms coming up soon too as well. Those two will certainly be interesting to see how they're impacting the Treasury space next week. I know all eyes is going to be on the Fed for the next couple of weeks, and then beyond that, who knows? Maybe Treasuries will settle down again, be a little bit of a quiet product, at least maybe until some later Fed meetings in Q3 and Q4. Moving on to another product category. Certainly been taking us by storm here on the show and a lot of the marketplace as well. I can't remember, Nick. We've been doing this coming on almost 10 years now, at least the network, not this program, obviously. The amount of inquiries we've gotten in about soybean options, you can probably count on one hand coming into the last few months, and then all of a sudden, it's just soybeans. We were talking to them on LSFO earlier this month. Look for that on our network pretty soon, our program we do out there with our friends over there at CME Group. And now, again, soybeans still just top of mind for so many people out there, so many things happening out there. We were talking earlier this week about soybeans and how, we've seen this protracted upside for a while. And, most people used to the traditional skew shape of equity and index options. So they're used to protracted upside equates to, decrease in volatility. Not so much the case out there in soybean land, where we saw the calls had a market premium to the point where the rally was actually causing an increase in volatility out there, which is probably something new to people coming from the equity and index options world, maybe starting to dip their toes in soybean options for the first time. Of course, a lot of these things driving up. We had the USDA crop report a couple of weeks ago, back on the 10th. That, of course, narrowed down the estimates of exactly how many the ending stocks for beans by about 26 million bushels. That, of course, equates to limit up all day long. So we saw a lot of rally ho there, and also the vol increase, and also it's been pretty favorable time out there in the last couple of weeks for producers and farmers to really leg in some pretty attractive protection, Nick. Not talking, 20, 30% out of the money, but even maybe like a handle or two away from at the money, which is pretty tight, and then turn around and sell upside, take advantage of that inflated premium on the call side, maybe get 2, maybe even 3 handles out of the money, and do that for even money, maybe even a credit. So that's an attractive prospect if you're looking to get some cheap or free, very, very tight protection, and also give yourself some room to run on the upside. So it's been pretty favorable setups for the farmers out there in terms of using the soybean options to their advantage. What else is catching your eye out there, and in terms of the skew as well? I know we've seen some interesting movements. By the way, you guys can always follow along, cmegroup.com/ it was TWIO, but if you try that URL now, it might be a little bit harder. I think if you go to the CME Group website and just type "This Week in Options" into the search bar, that's probably the easiest way to find it. And then that will bring you to the page that says, appropriately enough, "This Week in Options," even though the show is "This Week in Futures Options." And then, of course, you can follow along with every product category as Nick and I are talking about them. Right now, we're in the beans, so let's talk beans. Beans seem to be following the pattern, Nick, that a lot of other products have right now, where it's kind of all July all the time. Right now, July accounting for not quite half, but close to the volume we saw going up this week, about 41%. So big volume out there in July. In particular, what looked like the 1040 puts. We were talking about this earlier this week as well. Even though we saw some upside in soybeans recently, the puts were kind of leading the charge, at least earlier this week. Is that still the case? It's still been puts catching your eye out there this week, Nick?
Yeah, I think that's still the trend, because until this market sort of figures out which direction it's going to go, people will probably err on the side of trying to cover their base on the downside there. Now, I had been expecting one thing until, again, we talked yesterday a little bit, and then you watch what happened today, and we closed on I think a year high today. So we closed, but on thin volume. Okay, so that's what's going to be interesting coming into the weekend. And again, this is just conjecture on my part, but if you look, what you can do is, so we 1087.25. That's where the market closed for today, or roughly quarter tick here or there. But if you look at the volume weighted average price, that price was much lower than the closing price, which means that there was a big push up in the price, but there wasn't a lot of volume supporting that action. So a couple of things could have happened. It could have been some short covering for the weekend, because it is a long weekend, right? We've all done that. That makes a lot of sense. And it could also have been the fact that a lot of people were gone already, because it was kind of nice out until about 20 minutes ago in Chicago. Now it's pouring, but people could have been gone for the weekend, taking advantage of the long weekend. So not a lot of participants, and you get a little run up in the futures price. So up until about 2 hours ago, I thought maybe we'd have a chance to see this consolidate in a little bit, or I was more confident of them seeing it consolidate in, and maybe start to see the skew come off like we talked about earlier in the week. But after this little push up, and when people start to come back to the market after the holiday and see where the price ended up, I think we might have a chance to see some real choppiness on the Globex Open, because you'll see guys that were spooked because they weren't around to see this move up. You see gals and guys of sorts. I got to remember to be inclusive. That's my most important thing, guys and gals. So I should say people coming back to the market, and we won't really know what direction this is going to finalize until I think that opens, and it opens with a trading day coming after it. So we'll see some Globex trading on Sunday, but it'll be closed Monday, and then Globex trading again on Monday. So market's sort of in an iffy spot, given that we closed on highs, not a lot of people around. So it'll be interesting to see which direction it goes. So with that said, we're still seeing a lot of bid on the call. So there's still some opportunity there to take advantage of some of that crazy tilt in the vol curve for some vol plays potentially, and that means selling the upside and buying the downside. And if you don't recall, or if you haven't listened before, we did put some trades out there for a previous show, and it was just sort of me experimenting with the skew, the way that we look at over here, called quick skew, and the Quick Strike app, and you can see how those trades have been playing out. And if you note it, like yesterday they were up, today they're flat. So it's all a function of how close we start to get up to this 1080. So I'll be really interested to see where we end up here next week. But yeah, Mark, puts in the front, big volume there. 10% of the volume taking place on that 1040 strike, and then then after that, as we go out into the new crop, I think you're seeing more calls starting to come into play, and that's up into 1100 strike. So sort of a trading environment in the July, August, and September, and then sort of a fundamental what's going to happen next in the November, where the new harvest starts to come into play.
Crazy time out there in soybeans. This is definitely not the last time we're going to have to talk about soybeans here on the show. I got a feeling they're going to be popping up for quite a while, but let's turn our attention to the former big driver. Now it's number 3 on our show. I guess that shows you where it's stacking up in the rankings for this past week. Talking crude, of course. Maybe I think let's start out there with kind of the big story in crude, Nick. Kind of just, I guess you can call it the volatility apocalypse, the slaughter, call it what you will out there. Vol has just been taking it on the chin as crude seen a little bit of upside of late. We were talking, there's a lot of different ways you can measure your vol, front month vol just getting crushed, 11-month low on the front month out there. You can also look at products out there like OVX and OIV. OVX tracks, of course, the USO. ETF. OIV actually tracks the futures options out there. Both of those south of 36 right now as we're recording. If you've been following either of those products, they've been up into the high 50s, into the 60 range very recently. And back in the crazy times of mid to late February, they actually hit a high of about 80. So they've literally been cut in half since just over the last 3 or 4 months. So again, volatility, not what it once was out there in crude land, Nick, but that of course could shape up if you are perhaps leaning towards a premium buy-in side of the fence. Maybe perhaps that is welcome news to you. Of course, like we mentioned with soybeans, crude following a similar trajectory. July was where the action was this week as well. Open interest jumping nearly 14%. So it certainly was not a quiet week from a crude oil options perspective. We're talking WTI here, of course, listeners, accounting for about 60% of overall volume. So again, July was leading the charge. Everyone's playing in the near portion of the curve, not looking too far out. The July doubles, July 55 calls, lighten it up this week, about nearly 24,000 going up on those bad boys. Skew also ticking up, at least from the downside. We can get into that a little bit as well. And Nick, my previous, again, listening to that Treasury one, I may have to change my mind, but maybe we'll discuss it. My previous nominee for our crazy trade of the week was a pretty funky one. The June 85s. Yes, I said 85 strike calls, listeners, going up, trading 4,600 contracts this week. In case you're wondering, that's an increase of open interest by 343%. So someone was opening for size on the June 85 strike. I'm guessing they probably weren't selling. I don't know. Maybe not. But I'm guessing that was an opening buy out there on crude. So perhaps we'll start there. Nick, what are your feelings for that? Where do you come down on crazy trade of the week? This one, which is pretty optimistic, but the Merrill one is kind of just borderline nuts.
Yeah, I think the only reason I would give it to the Merrill one potentially is that if you look at the open interest on June 7, this June 2017, there are strikes open above it of the 85 call. So it could be that there's some residual activity from when things were a little higher, when somebody did a strip way long time ago, right? A big thing in the energy market is to do call strips. So they'll buy a call across an entire year, and they'll go out potentially, sometimes longer than that, or they say they want a particular quarter of a particular year. So it is opening. It is pretty optimistic. The difference there, this is also like a 10 delta call, between 8 and 10 delta call, but because it's so long dated, I might give it to, well, it's hard to say, Mark. It really is, because 139 and a half strike, whatever it was in the 10-year, you need to have a near apocalypse and the rates go to zero, right? You have the whole curve shift and the rates go to zero for those things to be of any value. So I'd say we'll put them on a balance and they'll probably come out pretty even. But yeah, I mean, it seems interesting to go out that far. And there always has to be a reason, right? I always would love to talk to the people that do the trades and say, why this strike and why now? And why not go in a little closer, right? Why not go in 10 handles and pay another, 10% and be that much better off? So not exactly sure, but how about we call it a draw, since it's our first crazy trade of the week. We'll call it a draw.
Okay, a draw. Two crazy trades. Both of them require some pretty significant developments in the underlying market for them to pay off. I mean, do you see crude touching 85 by June expiration, Nick?
Yeah, no. That's what do we got? We have another year on that thing. We've been to 100, right, in the underlying, but that hasn't been for a long time, and we haven't even been up to 60, and that's been over a year ago. So no, I don't see it, but I still see that there's plenty of opportunity to do something before that if you're looking to make a trade way on the upside. So not exactly sure what they're thinking, but we could do here what we could do. We get the crazy trade of the week on the physical side and the crazy trade of the week on the financial side, and they're winners in their own categories. And this way, nobody's worse.
Nobody's offended.
Worse off than before. Nobody's offended, right? That's how we do it.
Let's get into the vol there for a second, because obviously it's imploded quite a bit. Like I said, 11-month low on front month, talking WTI right now. Also the skew kind of ticking up. Walk us a little bit through the skew, if you don't mind, because you have the cool quick skew at your fingertips. What's driving that? Is it puts? Is it calls? What's really been driving that skew change over the past week here?
Well, I'm looking right now for the July. It's been, I think it's been primarily where the calls are catching up a little bit to the puts in terms of premium. So you see, if you're looking at the report, we had a skew at the beginning of the week of -3 vol to the put side, right? So calls minus puts, the puts were more bid, and now it's -1.25. So something had to gain or something had to lose. Sometimes they move towards each other. In this case, the calls got a little bit of a bid. So, I think as people start to maybe see that there's a chance for this upside to continue on, then we're going to see those things catch up again. Now, I'm going to look out a little further on the quick skew, and we don't get that teeter-totter effect. Like, we don't get the calls and puts switching all that much, not at least while we're in this range of futures price. So, we'll see how generally this is going to follow. I think if we continue to trend here, you're going to see the calls and the puts start to even out, and then we'll have to watch and see what the next step is. But you got to keep in mind we have the move towards flattening in the July. Still, as you go out August, September, October, November, December, you still got quite a bit of bid on the put side. So people are still, biased towards the downside over the long term. But the short term, with this little mini rallies, as you would expect, right, there's a little bit of change in sentiment.
Yeah, definitely. You see these little flurries, and that's why, again, I said July was leading the charge. Near term is going to always be the most volatile. Well, maybe not overall from a 11-month low and front month vol, but in terms of developing and volatility of skew, changing of skew, things like that. You're always going to see more of that in the nearer portion of the curve, but it has been interesting. Overall open interest increasing again this week, about 7.5%. So people not tired of crude, not by a long shot. So we got ties there, Nick, in the crude crazy trade of the week versus the crazy Treasury trade of the week. Again, the June, like I mentioned, it was a little bit longer term. It's not this June, in case that wasn't clear earlier. It was June of 2017. So that's a little bit more understandable. So I think I might be leaning on the Treasury side the more I think about it now. I think you brought me to the dark side, Nick. Speaking of the dark side, Nick, let's do really quick. We haven't had a chance to do this yet, but we got a lot of people loving the show, want to get their voices heard. So let's do quick futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to the Futures Options Feedback. Like the name implies, this is the portion of the show where you guys get to fire off your questions, your comments. Got quite a few, Nick. I think we have time for one. Maybe we should have to consider expanding the show to answer all of these questions. Let's start with one off here. This is right up your alley, Nick, so I'll just let you run with it. This is a question from a listener goes by the handle Groose. He or she writes, hey, regarding Eurodollar futures options, are there different quirks between the months? Eurodollars, if I had to sum them up in one term, Nick, it probably would be quirky. But this is definitely more in your neck of the woods. You actually stood out there in the Eurodollar pit for quite some time. So walk our friend here, Mr. or Mrs. Groose, through some of the different quirks you noticed between the months out there in the Eurodollar pit.
I'm glad I'm mute because I started laughing. You got Mr. and Mrs. Groose. That's hysterical.
That's a good one.
I try to be inclusive as I can. I'm put in that position every day. I have 3 daughters. They make me be inclusive, so I make sure that I'm as inclusive as possible. Anyway, I digress. So what are the quirks between the different months? Well, first of all, if you have ever looked at any of the Eurodollar tools that are available from the CME Group website for us, from QuickStrike, you'll see that the Eurodollars are shown in red or white, red, green, blue. So you see different colors there, and then you'll see lighter versions of those colors. So you can almost think of those different colors as separate products. So what you'll see in the whites, so when there's a lot of Fed activity going on, or we're actually in a position where there might be some tightenings or some easings, you're going to see most of the activity, a lot of the open interest and volume in that white portion of the curve. Okay, that red portion again is like is the year 2. So you think a year 1 is the white portion, year 2 is this as the red, and then year 3 is the green, and year 4 is the blue. Now the greens and the blues, from a long dated option, they have long dated options on those. So those expirations are really, really almost out of practical use for people that are trading as retail or even smaller groups, because that's going to be for people who are hedging long stuff. But the quirk would be that you can treat not necessarily the individual futures, but you can treat the different groups of futures as almost different products, because those represent different parts of the yield curve, right? So the whites, that's going to be very active stuff when the Fed is starting to talk. So if you go out there and look at the open interest in the volume in the front month right now, over the course of the next couple of weeks as we move into the FOMC meeting, you're going to see a lot of the activity out there, because that's where a lot of the change is going to be. Now you're going to see change. The Eurodollars represent a yield curve, right? You're going to see change in the futures prices as well if there happens to be a move by the Fed across the whole curve. But a lot of the activity is always going to be what's going to happen presently. So when we were stagnated for a long time and there wasn't a lot going on in the credit market or in the short-term interest rate market, you saw a lot of the action in the light, we'll call them light blues or short blues. So you look, it's the light blue color, but those are the short blues, and those are short-dated options on the longer-term futures. So those have sort of regular expirations that exist for this current calendar year, but they're on that part of the curve. So there's really a great deal to trade. So you can trade almost 3 or 4 different types of products within that Eurodollar complex. And each of those different sections of the curve is going to come into play depending on what's happening in the interest rate market, how far off some of the rate decisions are, and what kind of activity and what the frequency of those trades might be, or what the long-term sentiment on inflation would be. So I hope that's not too long of an answer, but that's sort of how you should think about it. They're really sort of different instances of the same product that are available to trade.
All right, Nick, that theme music brings to a close this very special episode of This Week in Futures Options. Thanks for your questions. We'll get to more of them on future shows, I promise. But before we go, Mr. Nick, give us a hint. What's cooking? What's up your sleeve over there in the land of QuickStrike? What can our friends look forward to that they surf on over and kick the tires for themselves?
Well, I feel like a broken record in a lot of ways, but I really always just try to encourage people to go over to the CME Group website and take a look at the free tools that are available from QuickStrike. We have QuickStrike Essentials, which gives you a sort of a mini suite of end-of-day tools that you can look at, and they're all in one place. And then there's also about 10 other tools out there, from open interest to vol term structure to special reports about the weekly options. So, and we'll keep you posted on any of the new stuff that's coming out, and there will be new stuff coming out throughout each of the next 2 quarters.
There you go, listeners. You heard it. Surf on over to cmegroup.com and then search for TWIFO in their search bar to search for This Week in Options. Either way, we'll get you to it. You can follow along with all this data. Hey, it's all completely free. Pick the tires and see for yourself. Maybe you find some interesting trades you want to let us know about. Hey, I think this was a crazy trade of the week. Let us know. We love to hear from you guys. And on behalf of Nick and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing. And of course, for sending in such great questions. Keep those coming. We love to hear from you. And we'll see you next time, right here on This Week in Futures Options.
This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.